you gonna start a business or something with cryptocurrency, but you don't have enough tokens into your wallet? No worry guys, today I'm gonna talk about Rabbit Finance, who can help you through the process. Rabbit Finance is a leveraged yield farming protocol based Binance Smart Chain released by Rabbit Finance Lab. It supports users participating in liquidity farming through overlanding plus leverage to get more revenue. When the user has insufficient funds but want to participate in the DeFi liquidity farming, Rabbit Finance can provide up to 10x the leverage to help users obtain the maximum revenue per unit time, and at the same time provide a borrowing pools for users who prefer stable returns to earn profits. But through this process, there are some risks, there are some hurdles we have to follow. So in their white paper, they have stated that risk statement, and let's go through it. Risk to lenders, loss of capital that could happen. Risk, the risk of debt acquired by underwater position in case liquidators do not liquidate in the time during a period of high market volatility. Migration, we have taken a cautious approach in setting key parameters to ensure a large buffer. We also have provided enough incentive to liquidators to call and liquidate applicable positions. Hence, we believe this risk scenario is very unlikely to occur. We aren't expecting this, but if happens, those risks are there. Time of asset return risk. Delay in getting deposited asset back in case of pool high level of utilization. Please note that farmers can borrow the funds as long as they like, and there is no fixed term for when the funds must be returned. Migration. We use a triple slop interest rate to optimize for 90% fund utilization. The step increase in interest beyond the 90% utilization should incentivize more lenders to deposit funds and borrowers to return outstanding loans, optimizing the pool to stay flexible level below 90%. And then comes to risk to yield farmers. Price impact when entering existing a position. Risk, if you try to open a large position relative to pool size and require swapping, your transaction could incur a large price impact. As an example, if a liquidity of a pool is USD 100 million, swapping USD 1 million worth of token would incur 4% price impact. If you are unfamiliar with how price impact works for AMM, please, you can read here. There is a link stated here. Migration. Open multiple smaller positions to open a smaller position and add collateral to that position at a later time. You should wait for a short interval for at a bigger to bring price back normal. Bring combination of assets that requires lower swapping requirement. If you want to open a 2x leverage on cake BNB pair, supplying only cake token will result in a very small swap amount because the vault will loan to you approximately equal value in BUSD. Avoid opening an existing position a short period of time. When existing a large position, choose minimize trading strategy, reduce price impact for swapping asset and trading fees. Impermanent loss are here. Risk of capital loss from asset rebalancing in automated market. Pool stablecoin pairs farming are also subject to impermanent loss. Just like any other coins, the price of stable tokens are dictated by supply and demand, which sometimes can cause the price be off-pegged. While this value is generally small and transient, we have seen instances where stablecoins stay off-pegged for an extended period of time. Migration. Impermanent loss is not unique to Rabbit Finance. It is common among all yield farmers and AMS. While we currently do not yet have a way to migrate yield, users can choose to yield from asset to pairs have high collateral assurance to minimize potential IR. Negative API. The scenario is where the borrowing interest rate is higher than your yield farming gain. This means your debt position will grow faster than your equity value. If this continues for a period of time, it could reduce your equity value down to the level of triggers liquidation. Likely cause for your scenario offers a highly borrowing pool utilization, pushing up borrowing interest rate. a significant price drop in the reward token. Migration. Monitor your position closely to have plan if API tunes negative close position. Wait and see or add collateral to the position. If utilization remains high for a period of longer than a few days, the team will analyze the situation and likely raise the borrowing interest rate, which should lower liquidation. Risk. If you open a leveraged yield farming position, Rabbit Finance borrows a base asset for your firm. You run the risk between liquidation price of the borrowing assets appreciates against the farming token pair. Here is the smart contract risk. There are same wide. While smart contracts have been audited by third-party firms, they could theoretically have vulnerabilities, and migration having smart contracts audited by multiple professionals, third-party firms decrease the chance of vulnerabilities here. While do your best eliminate all the possible risks, you know every position, every project have risk in their strategies or in them. DeFi is an industry where events that no one predicted can occur. So please don't invest your life-saving or risk assets you can afford to lose. Be careful to this platform, but this can be the next big thing, and this can hit for in this current market. Thank you very much.